welcome to Cafe Mutual YouTube channel. Friends, one interesting trend in the investment world is performance of gold and silver. So both gold and silver have delivered at par returns with Nifty 50 over the last 5 years. So to know more about upcoming trends in gold and silver, today we have with us Vikram Dhawan, Fund Manager Commodities at Nippon India Mutual Fund. Vikram has 3 decades of experience in the commodity market. So let's welcome Vikram. Good evening, Vikram.
Good evening, and thanks for inviting me on your show.
So Vikram, so what's your near-term outlook on gold? Commodity market, especially with respect to gold and silver, and what would be the impact of election results on these commodities?
So, the factors which are driving the gold prices, the main factors are the central bank demand and the physical buying
Hmm,
led by the Chinese. Even the Indian physical demand has been fairly resilient. And you have to appreciate that India and China put together account for roughly 50% of the physical demand.
hmm,
So, why that is, it is very important to understand why this is happening. Central bank demand is happening because, central banks for the past 20 years have been shedding dollar holdings at the rate of about half to 1% annually. In fact, it has accelerated recently. China, in the past 2 to 3 years, dumped somewhere around $300 to $400 billion worth of US treasuries. So maybe 20 years back, the overall dollar holdings of central banks across the world was 70%. Today it is below 59%. So about in
hmm,
past 20 years, about 13-14% of the dollar reserves have been
hmm,
shunned. And this is primarily because dollar doesn't look as invincible as it used to look, 20 years back.
hmm,
I mean, US is running a budget deficit of about 6%. And usually they run this kind of deficits in either wars or, geopolitical or financial calamities, economic calamities. You can imagine if a developing country were to run this kind of a deficit, they would be, downgraded to junk. US can get away with it because it's a large economy and they have a history and, the circulation of dollar is also something which cannot be overlooked. So that is why I think for central banks, it is more a diversification story, not to put all your eggs in the basket. And whatever treasury they are selling, part
hmm.
of it is going to gold. So
Okay.
that is as far as the reason for central bank selling is concerned. Now, will it continue in the future? Well, it looks like, obviously. I mean, I don't know what target they have, whether they want to bring how low they want to bring the US Treasury holding. That will depend upon each central bank, but difficult to say that. But the trend is expected to continue at least in the medium to long term. So that should keep the prices quite well supported in the medium to long run. Short term obviously is difficult to say because of there are so many other short term factors. Why physical demand is happening or why the Chinese are buying is something that to learn from by investors across the world, including India. I
Hmm,
mean, Chinese buying started once their real estate market and the equity market started declining,
hmm,
and they needed something to diversify into, and that is, I think, a very important lesson for investors, especially in India,
hmm,
that you should have a diversified portfolio. If you wait for the music to stop in the risk assets and then you go and buy safe havens like gold, you will be paying it. That can be a very expensive proposition. I'm sure the Chinese must be realizing that buying gold at these current prices is not a cheap proposition. So I think these two factors will also, the Indian demand has been fairly resilient despite the higher prices. And so I think this physical story will also continue, at least in the medium to long term. Short term, we cannot say.
hmm,
One very important factor in the near term, since you talked about the near term, worth looking at is the US elections.
hmm,
Now, in the past 20-25 years, in 4 out of 5 US elections, gold prices have done well in the run up to the US elections. And this time around, we are all aware the stakes are very high. So the
Hmm.
probability favors gold price actions. So I think all these factors are playing up. But again, there will be volatility in the near term. You will see investor selling, you'll see investor buying, momentum funds coming, buying and selling. There'll be volatility. But I think the long-term trends which have been driving the prices, at least in the medium term, seem to be intact.
Okay. So Vikram, generally gold and silver are known to have negative correlation with the equity markets. But however, gold has performed at par with the Nifty large cap index in the last 5 years. So what are the reasons for this, and why do you think that gold still makes sense for diversification?
So I think this is not the first time that gold has had positive correlation with equities. If you look at the bottom of 2008, if
Hmm.
you look at the COVID bottom, both equity markets and gold rallied together. More often than not, gold tends to bottom earlier than the risk assets.
Hmm.
This will happen because, whilst from the macro theory, typically, when there is a risk-on environment, which means stock markets are rallying, the real estate is doing good, credit markets are also rallying, which is happening as of now. Gold is out of favor, but that is just one of the factors.
Hmm.
There are four main factors which drive the gold price. One is obviously the physical demand, the jewelry demand. Second is the central bank buying. And third is the investment demand. And fourth is the event demand. Event demand could be a geopolitical event or a war or inflation or or even volatility in the stock markets also, because historically, whenever stock markets have been extremely volatile, which means in multiples of one or two or three standard deviations, gold has been very handy in terms of hedging that risk. So I think if you put all those factors together, the majority are in favor of gold, except perhaps maybe it is a risk-on environment, and in investors, some investors are preferring risk assets to safe havens. But I think the fundamentals of gold are overwhelming at this point of time.
So talking about multi-asset funds, so the AUM of multi-asset fund has tripled in the last 1 year. So what are the reasons for the popularity of this category of fund according to you?
So I think whilst you say it is quite popular, but I think if you see the statistics globally,
Hmm.
in India, the multi-asset funds AUM is hardly 1% or 2% of the total AUM. Whereas if you look at the European and the North American markets,
Hmm.
multi-asset or asset allocation strategies tend to account for anywhere between 10 to 30%. So I think we still have a lot of to catch up as
Hmm.
far as the Indian multi-asset story is concerned. Why typically, they are more preferred in developed and larger or evolving or evolved markets is because as the size of the portfolios increases, as the affluence increases, the investors, the serious investors who genuinely believe in wealth creation through capital markets, not through trading or speculation, they are more concerned about their long-term risk-weighted returns,
Hmm.
not so much the near-term returns or the absolute returns. Because there is no point having a portfolio which is up by 20% 1 year and down by 30% next year, because then it sort of puts your compounding, off the track. And as we all know, the greatest tool for wealth creation is compounding. So
Hmm.
I think as the market evolves, portfolios become bigger, the investors move away from trading and speculation, multi-asset funds will become extremely popular. And also, from the investor point of view, the convenience is also there. You're getting all the major assets in a fund. You don't have to time the market, buy one now and buy the other later. And last but not the least, all of it under the mutual fund umbrella with all the benefits, safety, and security of it.
Okay. So Vikram, Nippon India Multi-Asset Fund has been beating its benchmark in 1 and 3 year period. So what are the three things that have contributed to this performance?
So one is obviously the effective diversification. We have, fixed allocation to all the assets, which means irrespective of whatever the view of the market is, whichever direction of the market is, whatever is the volatility, whether it is high volatility market or a low volatility market, the investors are always getting in exposure to the main asset classes, which is equity, debt, and commodities, mostly gold. So that is one thing which has, and that also answers your question that, if you would have purely gone from the risk on environment, you would have not put too much of money. I mean, conventional wisdom says that you wouldn't have put any money in gold or silver. Whereas in a multi-asset fund like ours, which has got fixed allocation, you did get the exposure to gold and silver also, and which perhaps has been beneficial for the investors. Secondly, the cost effectiveness when you have the allocation fixed of each asset, so that the churning in the fund becomes less. Cost is not just about brokerages, but there could be impact cost also, because typically if you are churning a portfolio in times of panic buying or panic selling, then the impact cost can be very wide. So that is one thing which has helped. And last but not the least, the behavioral benefits. Just because we have a fixed allocation to each assets, we tide over emotional issues. I mean, after all, at the end of the day, fund managers are also humans, and you can be. I mean, you saw what happened during the election. The this week has been, if nothing but a lesson for investors or fund managers of all stripes, that market can be so unpredictable. And unless you have discipline and process in place and risk management in place, which we perhaps pride ourselves in our organization and specifically in this product, then I think perhaps either you are blessed with a crystal ball. In absence of that, I think it is the behavioral benefits which will perhaps put you, make you stand apart from the crowd. So these three were the main reasons why, the qualitative and philosophical reasons, which contributed to the success of the funds. And one of many of the reasons, amongst many of the reasons.
So, Vikram, despite being a multi-cap structure, Nippon India Multi-Cap Fund is an equity-oriented fund with high exposure to large-cap stocks. So, what are the key reasons behind this?
So I think it's not just equity. If you look at fixed income or commodities or overseas equity and all, this is something which the fund managers call they will take. I mean, you could even ask that why you have X% of gold in the portfolio or Y% of duration in the portfolio. So, as I mentioned, when you have a fund where the allocation is fixed of each assets, then the focus is more on the fund managers to do their best within that particular asset class. And I think you will have situations where each asset class will have you know, within that asset class, there could be change in allocations to whether from the market cap size or whether from the style, from the, whatever is the style of the fund sector or whatever it is. So that will happen. But all I can say on this is all very process driven, keeping in mind the risk management and keeping in mind the overall objective of this fund, wherein we believe that lot more wealth is created by being invested in the asset class of the moment. I mean, as we have discussed in the past also, that if an X asset class is not doing good, then it doesn't matter how good you are in security selection or the stock selection. And contrarily, if the particular asset class is doing very well, then to be invested in that is usually more than enough. So I think all these things you will observe. They will be qualitative and quantitative. Sort of. You'll see the differences. You'll see the changes in the funds which happening. But again, all within the fixed ratio of each asset classes.
Vikram, one last question. Where do multi-asset funds fit into clients' portfolio? And what is the ideal time frame to invest in these funds?
So for a serious investor, not a trader or a speculator, multi-asset funds should be core of their portfolio. Why? Because you have through one product, uh, investments into or exposure into the main asset classes. So, this is one part of your portfolio which is timing proof, if you really want to, put it that way, because at any given point of time, at least one, if not two asset classes will be doing good. So you will always have your fingers in that pie, which is right now doing well. So that is why it should be part of your core portfolio. In terms of the time horizon, as we have seen historically, that the leadership between each asset class is changed between 2 to 4 years. So I think if a time horizon anything less than 3 years will be suboptimal. So I think you should keep a time horizon of at least 3 years, 4 years if possible, when you are looking at this fund.
So with that, we have come to an end to this interesting session. Thank you so much, Vikram, for your valuable time and inputs.
Thank you very much, and thanks again for inviting me on the show.
Finally, I thank each one of you for being such a wonderful audience. Have a great day at work, guys. Bye.